Hello, this is Steve Malone with Compass FX. Hope you're doing well today and again some good trades. Today I want to talk about trading the bias of the market, specifically about trading a bias reversal in the marketplace. Now, some of you listening to me right now may not be familiar with what I mean by the bias in the marketplace. A bias is an opinion, a sentiment, a feel for the direction of the marketplace. And oftentimes it's real simple to determine the bias in the marketplace. The bias will either get stronger or weaker depending upon how the trend lines connecting lows to lows in an uptrend and connecting highs to highs in a downtrend. So let's just start from the beginning here. How do we define the bias, and how do we detect the time of trading a bias reversal? So real simply, I'm just going to take a look here at the dollar Swiss on a daily chart. Go from this low point across this low point. You can see that we pretty much came to a low point here and we bounced up. How do we know when the bias is getting stronger? Is when the market makes another trend line in that bias direction. The bias direction's up or slanted to the upside. The market makes a strong move up, so the bias in the marketplace is getting stronger to the upside, going from that low to another low. Now what we look for is, do we get another higher low to show us that the bias of the market is continuing to get strong in that direction. There's that low right there, and I'll put it right there. And notice how the market walks that trend line up, gets a little stronger, comes back, makes a low, but yet we walk the trend line again, make another low, but yet market walks a trend line. And then we start looking for the reversal. Now, the Traders Dynamic Index here is giving us a double top scenario right here, but notice how it showed a potential double top right there and then pushed up again on us. Well, that was that positive bias in the marketplace pushing up even stronger. So this right here is the sign of a stronger positive bias in the market. We have an uptrend, then a stronger uptrend, then an even stronger uptrend. So where's the top, and what do we look for to determine that bias reversal in the marketplace? Well, if I step in a little bit closer here, I'll go down to the 4-hour chart so we can step in and take a closer look. And let me make sure I've got these set appropriately. There we go. And take a notice, of the last few days we actually had another stronger trend line. See, these lows were following the trend line, and then we made a higher low. Look at this. Look how that shifted even a stronger bias to the upside. So when does that bias start shifting from a positive bias to a negative bias? You take that final trend line that we just drew, and what you look for is a lower low in an uptrend. In this case, we'll move over here, and that's the start of the shift in bias. So we were going stronger, stronger, stronger up. Now we make a lower low, come off of that. Our bias in the market is shifting. So at this point, what we look to do is to trade short on the break of that same trend line. Instead of connecting it to the higher low that we had over here, trade that break of the lower low. And what do we look for as a target? That previous trend line is one target, or look for a previous resistance level. Old resistance becomes new support, and that's right about in this area here. And you can see how the market came down, hit that level before getting to that old trend line here. Another target you can do is simply take in the Fibonacci retracement tool, like I do in my active trade room, and run it in reverse from swing high to swing low right there, and look for the market to come down. And notice how the market came all the way down to that 1618, and then down to the 200 level, bounced back up to test the trend line, then eventually back down to the 261.8 level. So this is a simple technique to trade the bias reversal in the marketplace. Let me show you it again, and we'll take a look at the Aussie dollar. Now, I've already laid out the bias in the marketplace on the Aussie dollar. As you can see, the bias in the marketplace, we have the uptrend happening, higher lows coming across here. We come back to a major, so I connect these two. Then from that low, we had another pullback here. From that low, we had another low right here. Let me step in a little bit closer so you can see it. You can see that low right there, and look, notice how the market started walking up. But then eventually the market comes back a little bit, and that's lower then this low. So we had this new trend line right here from that low to this low. We walked up a little bit, but now from that low point we have a lower low. Now this trend line will act as the bias reversal point in the market. So as we move over a little bit, you can see how the market went from this low point back up, walked that trend line some more, turned over, and now we're starting to break this lower trend line. We're starting to get that reversal in the marketplace, and notice what the TDI is doing. See, I've had some folks write me and say, Dean, the TDI was turning over, but then it went back up on me. Right here we had a turnover and the market went back up. Then we had another turnover and the market went back up. Well, the key to look for in that bias reversal, going from a positive bias to a negative bias, is to look for that lower low. So again, we have this trend line right here that I drew. Again, we went from low to low, then from low to higher low. Again, we took it one more time. We went from a low to a higher low. Then we waited for that new low point. That new low point, I just simply moved the trend line over, and this trend line now becomes my bias reversal trend line, or what I'm looking to go short at. So we look for a break here with the Traders Dynamic Index giving me that signal. Now what do we look for as a target? Well, again, old resistance becomes new support. So I'll look back here and we'll look for this level right in here be a potential target. We can also go to the swing low point, the last swing low, to swing high, and we can see that there's the 127.2, the 1618. Interestingly, the 1618 and the older trend line, the older positive bias trend line, is right there. Now, the same holds true if the market continues to run down and breaks this trend line. Then the bias in the market is shifting. We're going from a positive bias turning into a negative bias. Now if I go back and take a look at the Swissy for just a moment, I want to share something with you. I'll clear out these trend lines that we've had going to the upside. And if you notice, we're on this 4-hour chart. I'll go down the 1-hour chart because we have this whole move going down. At some point this move is going to go back up. So something I noticed on the hourly chart is if I simply draw a trend line from the last high point that I have here to this high point right here, there's a pretty good negative bias trend line right there. And notice that it got even stronger coming down like so. From that high to this high. Again, on a negative bias, you're looking for lower highs. Well, notice here. Notice that the market came up, had a high point right there, and fell back over. This is the negative bias reversal. So we'll draw a little trend line going from here to here. That's the trend line reversal right there. That's where we're shifting from a negative bias to a positive bias. Potentially in the marketplace, we'll be looking for a break of that. Where's our targets? Again, we look at that old support becomes new resistance. So there's a potential target there. We go from swing high to swing low, run the fibs in reverse. Look at the 127.2 is right there at that same level, but we could go higher. If we go higher, the next target we're looking for is this trend line that was the higher negative bias trend line. So this again is a technique that you can use to determine those turning points in the marketplace, from a positive bias to a negative bias, or a negative bias starting to turn into a positive bias in the marketplace. It's just basically following the trend lines and looking for the appropriate trend line break to see the turn in the marketplace. And again, match it up with what the Traders Dynamic Index is telling you. You can see down below that the market baseline is below the current price action in the marketplace. With this move to the upside, a break here, we've already got targets lined out. Where do we put our stop? Oftentimes I recommend to folks to put their stop on the other side of the price action channel with the synergy method, or put it below that swing low. Well, folks, Dean Malone with Compass FX, I hope this little technique for trading the bias reversals in the marketplace will help you in your trading. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.